All right. So this is what I consider, or what I'm calling, the king gap. The king gap strategy. Had to call it something. So, all right. This is my sister. She has literally zero experience trading. So I figure this would be a great opportunity to teach her something. If I can get her to learn this basically A to Z, then I feel like anybody can learn it, and it is super simple. And I'm about to show you how simple it actually is. So there's a saying that some traders, or a lot of traders, say, and it's first gap is king. So whenever I'm going to take yesterday as a good example. Let's just erase this and move down. Well, let's dive into the platform a little bit. This platform, what we're looking at right here, is TradingView. And TradingView is just simply basically an app, like an app that you can put on your phone. So I have it on my computer. I also have it on my phone, and these are all the tools. You can click this, put like a trend line on. Can erase that. I can change that to a horizontal line. So if I want to mark out, some sort of bottom, I can do that. I can change the colors. There's all kinds of tools. I can go over to the paintbrush, select the rectangle, make any type of shapes. What else can I do? I can measure. Like, these are just tools that I use every single day. So I can measure how many points. Now, when I say how many points, it is just simply, these are the points over, this is the price. So if it moves $1, that's considered a point.
Okay.
I don't know why we say points, but I could just say it moved $100. It'd be the same thing.
Okay.
So this is the program. I'm not going to go into like how to get it. That stuff's all on YouTube. There's millions of videos how to sign in and use this program. I use the very basic. I only actually, the subscription that I have for this, I can't remember the exact price. I think it's like 15 or $25 a month for this subscription, and it's just essential. But there's a lot of other, like, you can get more screens. I like with the essential, you only get 2 screens, so I can look at 2 different charts. Yeah. Questions about that?
No.
So yeah, basically this is the platform. And then when it comes to actually getting your money into the platform, you just come down to the trading panel, and then these are all of the brokers. So these are the banks. So if you're trading a prop firm, it's most likely going to be through Tradabate. If you have like a Quest Trade or AMP, which I also have an AMP, so you can click the AMP and it will link your bank account onto this. So once you, like, I'll just, for the video sake of it, this is my paper account, right? So this is a fake bank account. So like, this is for you if you actually want to, go on and learn this. You can jump on a paper account and physically take trades, push buy or sell, and physically see. So the first thing, in order to learn the king gap. Now, the reason why I say the king gap is basically, I think, because I trade on the 15-minute, and I truly do believe trading on the 15-minute is all you need, is the most crucial time. It's like, it's zoomed in enough where you're taking intraday trades, but it's zoomed out enough where you're not getting manipulated. And when I say manipulated, price, just is radical. Like, if you zoom in, this is the different time frames. So right now, every candle represents 1 minute of time. So you see the counter right here is counting down.
Yeah.
So once it gets to 0, then it starts the new candle, and then that's for 1 minute it represents one candle, and then but I like to go to the 15-minute time frame. Let's go back to yesterday. This is all I'm looking for. This is so basic. So what I look for is a fair value gap. And what a fair value gap is it's a 3 candle formation. So with this opening, so the dark black here is the New York session. So it goes from 9:30 to 4 o'clock, this very dark area. And then this is pre-market, this is after hours. But you see how like pre-market, there's not a lot of volume here, right? And then we shoot up with a bunch of volume. And this is a fair value gap, 3 candle formation. We have the bottom, the first candle, the second candle, and the third candle. Okay. And the gap is this part. It's just between the 2 candles. So you have the first candle, the gap candle, and then the top candle, 3 candles. And then this gap, it's not technically a gap, it's the distance between the very top of the first candle and the very bottom of the third candle, and this is your gap in between. So they called ICT concepts. ICT is just a trader. He like patented all of these sayings. Okay. But basically, it's just it's a fair value gap. It's basically that simple. So what I look for is so I'm a dip buyer. So I don't trade. Like if we come up, we shoot up for the first 3 candles. 1, 2, 3, 4 candles. And we reach resistance. So this is resistance right here. Do you agree? Because we came up to this candle right here. Yep. Just zoom in. And we stopped. Okay. Like violently came up. Aggressively came up. And we stopped. And then we came down to here. And then we came up, and then we came down, and then we came up, and then we came down. So this is considered resistance, right? Price came up and it stopped, and it's showing like and then it consolidated. When I say consolidation, it's just moving like there's no volume. It's just gradually going up and down, up and down. There's no one way price action. It's just stuck in like a tunnel. So this is the top, which is resistance, and then this is the bottom of the consolidation, which is the support. So if I was a breakout trader, I would anticipate us getting price action to break out of this consolidation, moving past the resistance, right? So this resistance that we came up and we got rejected, it, like in real time, this dropped pretty quick, and then you can just see it over and over again. It's very clear once you start seeing support and resistance, right? So once we got above the resistance, it should hold up as support now, because that's what happens whenever you get when you find some sort of resistance and then you break above it, which this candle did. You just see this massive body candle. It's just saying like you're broken. Like I just broke right through you. You're disrespected. So once that resistance is disrespected, it will flip to support now, and that's exactly what it did over here. Okay. Right? So I'm sitting here. This was just yesterday. This is what I was doing. So we're sitting here, and so the king gap is on the 15-minute time frame. I'm looking for the first fair value gap. So yes, we do have a fair value gap down here, but it doesn't, just because that's the first one of the day doesn't mean that's going to be the first one touched of the day. I want to trade off of the first 15-minute fair value gap that gets touched. So we have one here, the first one, and this is the orb candle. So I'll explain what the orb candle is. Basically, the most popular, most trending way to trade right now is the orb, and it stands for opening range breakout. That's all. Orb is just a acronym.
Okay.
So so a lot of people, what they do to trade the orb is they'll mark out the very bottom of the 15-minute candle and the very top of the 15-minute candle. Let's just put this in a different color so we don't get all mixed up. Boom. Like that, and like that. All right. So this is the orb, which is, it's very viral. Like there's so many successful traders that are trading the orb. So what they do is basically they trade the breakout of it or the retest of it and so on and so forth. It's not what I trade. I just want to emphasize on the orb candle, what the orb candle is, because this is going to come important later. Because if you do happen to get a trade off of the orb candle, it actually raises the win rate quite a bit. So it's crucial. It's super crucial. Like if this had came down and touched before we continued higher, that the win rate is going to go up. And I'll show you how I know that. Anyways, let's get rid of that. I just don't want to keep. I want to keep the chart as clean as possible. Less confusion, right? All right. So what have we learned so far? We've learned what the orb candle is, what a fair value gap is, and where we can potentially see support and resistance in this particular chart, right? So we have the orb, we have the 15-minute candle, or the first 15-minute fair value gap here with the orb candle. We came up, we made resistance, we broke through it. All right.
Okay.
So what do we have right here? If we zoom in real close, do you see another fair value gap?
Not really, but my eyes aren't going there.
Okay. Here, I'll just zoom out. So because it is kind of tricky to see, and in real time, like let's just zoom back here. All right, let's just go back. So that part of the chart is missing.
Okay.
So we have a candle, a massive push through this old resistance, and now we have this candle. So we actually have, if you look close, we actually have from this the top of this candle to the bottom of this candle, we have a fair value gap.
Oh, good.
You see that?
Yeah.
That's good. Now that I'm zoomed in real close, you see that?
Yeah.
You see the top of this candle, the first candle, and then the gap candle, and then the top candle. There's actually like these candles, like if this candle came all the way down here, then there would be no gap between the three candles. You know what I mean?
Yeah.
Okay. So now that we have the second, so now there's two fair value gaps on the screen. We have two. We have this one down here, which is obviously it's easy to spot that one, right?
Yeah.
But when you're in real time and you see this push up and this one not retrace, back all the way, you're like, you have it zoomed in and you're seeing it in real time floating here, and it's got to come all the way down here in order to close that gap, right? And it doesn't. It closes up, it comes down and then comes up and closes here. So I guess I should rewind a little bit. The candle, a green candle, will open at the bottom and closes at the top of this body. This is a candle, so this is your body, the big area, and then the wick is, the little pencil wick, or the candle wick. So it opens here and closes here. So this candle, it opened up here because it's red.
Yep.
We came down and then we came up and then closed here, right? So we moved down this much in 15 minutes, all right? Because it's a 15-minute time frame.
Okay.
Creating this gap. So once that gap was created yesterday, which I have it all recorded on YouTube, of course, and once the gap is established, I always like to see where the support and the resistance is. So, I do have it here right now, but you could potentially move it down just a bit to the body. Like this candle here, see how we came up, this kind of like it kind of was just so fast, it like kind of broke through and a little bit of a fake out, and then this was another fake out, but then when it this one closed and then this one opened, we just dumped. So there's obviously something here showing us that there's a lot of resistance. And then when we finally broke through, so in real time, this is where I had my support, my main support line. And then what did we do? I wasn't as patient as I should have. I was actually, because it was just looking so strong. So I ended up starting a position up here and then averaging in as it came down. But if I had have been patient and just waited for that touch, waited for this price to come back to this fair value gap, that's the entry. That's where you want to buy. Because this is basically the way I look at it is this: you want to jump on the train that everybody else is jumping onto, if that makes sense. So it's either going to be a northbound train or a southbound train. Once we establish, we recognize that this is obviously a northbound train, right? And this like for the first 30 minutes of the day, everybody was buying. It's very obvious. And then we stopped, right?
Okay.
And then everybody hopped on another train heading north. It's pretty obvious that we were chilling out, taking a break, and then we hop back on the same train.
Okay, so the green is people buying then.
That's all buyers.
Okay.
Buyers. Green is going up, and people are buying. Yep, people are buying when we're going up. So, yeah, if you can think of any question at all, because it's going to be good, because like obviously you're a new trader, so if there's anything that you can think of, it's probably the same thing other people are thinking of.
Yeah,
right?
my question's gonna be stupid here.
No, there's no such thing as a stupid question. No such thing. So we were traveling north over here on the train, and then we decided to take a break, and then now this is the next train that's heading north. So basically, the way you look at it is, let's just identify which way the train is headed. All right. And we do that with these massive green candles, breaking through some sort of, in this case, resistance, but it can be support because we can make money if we're going up or going down, right?
Yeah.
We don't have to just buy and then sell. We can sell and then buy. We can do it both ways. So this is the train. Once we come back, usually about halfway, but into the fair value gap, this is where we take the buy. And look at that price. If we had have just been patient and bought inside the gap where I should have, from the gap and you just held it for 15 minutes where it closed right there, that's 32 points, right? So with the smallest position size for every point or dollar, you make $2. You make $2. So if you have 5 micros, that's $320 you would have made on that trade. That's relatively small position size. I can trade up to 60 with a 50K account with take profit. You can trade up to 60 micros, 60, which is like full port. But I mean, obviously, the more size you put on, the more risk you're putting on. I typically allow a 50 points of room. So my stop loss, my hard stop loss. So if I have 5 micros on, that's $500 worth of risk you're putting on. All right. And it's typically a 1-to-1. You want to make if you're putting on $500 of risk, you want to make at least $500 worth of money, right? Because this is all numbers.
Yep.
It's all based on, trying to get as close to like over a 1-to-1 ratio of risk to reward. So if you're risking 500, you want to make at least $500 to $1,000 per trade. And then, so if you can do that with a win rate of over 50%, then you're going to be profitable, right? So this was the trade I took yesterday. And the day before was the same thing. Let's just quickly go over the day before. I'll see if you can spot out the fair value gap. Where was the first fair value gap? You see it there? Exactly. So she pointed it right here. So this is the first fair value gap. So this was a quick one too, because this was the obvious northbound train, right?
Yep.
It closed here, opened here. We came down, and the candle closed. Like with
Why does it do that though? Like why does it open and come down?
There's no reason for it.
Oh, okay.
The market does what the market does. There is no rhyme or reason. If you could figure out why it does what it does, you'll become a multi-billionaire, right? so that's why we're just always putting ourselves in the best position possible. And that's why I think this strategy is like the most simplified strategy, and it puts yourself in the best position possible, right? We're just trying to put ourselves in the best position possible. So, we have this little bit of consolidation in the first 15, for the first 45 minutes. Once 10 o'clock hits, we got some buying pressure. The northbound train kicks into gear. We close here, we open, we come up a little bit, and then we come down, right? Because see the upper shadow? That means we came up before we dropped.
Okay.
And then we stopped here, we opened here, right? So as soon as this candle closed, because you can see the timer, right? You can see the timer on the candle. Once it strikes 0 and it hasn't come down to here, then we have a gap. And then what does it do? This one opens and immediately drops. So I'm in as soon as it comes down and it touches that gap, I'm pushing buy, right? I push buy. And then look at that. You can if you had to sit in this for 30 minutes, each candle is 15 minutes. If you had to just sat in that for 30 minutes, and you had to just, like, realistically, even if you didn't quite get the tap, that's 100 points. So for just the smallest position size possible, even with one little micro, you would have made $200.
And you have that 15 minutes on each candle to do what you want to do.
You can hold it all. You can hold it for like forever if you want.
Okay.
Yeah, there's no time limit. It's just for this strategy, I'm trying to just trade one candle. If I don't get it in one candle, like, typically if price action is efficient, we'll come down and rebalance, and then you kind of gotta. I also look at these fair value gaps as like a gas station. We come back, we fill up, and then we start on our tour, like on our destination, right? Obviously the destination is up, but we can't just go straight up. The market doesn't really do that unless there's like something happening. Like if there's a panic buy or sell, then yeah, you can go straight up or straight down. But typically on a normal day, this is what happens: is a staircase, right? It's a staircase. So I kind of look at these fair value gaps as like a gas station for the train.
Yeah.
Right? Maybe the train, couldn't go all the way north. We got to come back, get some gas, some more passengers, basically more buying pressure. And then this is like your entry. This is the entry point. That's where we buy.
Okay.
And it's been proven that this works. I have the stats right here. So I'll give you a look, and I'll give you the stats. So I have this. I'll put a thing up on the screen that what she's looking at. So I have it numbered. 1 through basically 17. So what I'm keeping track of is which candle we're using and what win rate we have on that particular candle.
Oh, okay.
So like I was saying, actually I think what was this one? Yeah, so the day before that was the orb candle. It was a massive win. So this is going back on last Tuesday, January 8th. We got to utilize the orb candle. This is the first. So now this is a pretty good example because now we're flipping the other way. This is showing you that it's not just up, but it also works down.
Oh, okay. I was just going to ask you that.
Yeah, exactly. So where's the first 15-minute gap on this? It's very obvious because it's the orb candle.
Mm-hmm.
So you have it right here, right?
Yep.
The first candle. So we're using the candle pre-market, right? And then the orb candle, which is the first 15-minute candle. So it starts at 9:30, stops at 9:45, right?
Yep.
So realistically, there's no trades. If you use this strategy, there's no trade until after 10 o'clock, right?
Right.
Because this candle here closes at 10 o'clock. So it's impossible to take a trade before 10 o'clock, right?
Yeah.
So this one was tricky because when you first see this massive candle, it's very intimidating. Because the problem is we look at how big it is.
Yeah, it is.
Where it's 100 points. So this is where it comes down to, okay, I normally allow 50 points of risk, but this candle is 100 points. So the only way you can manage such a large gap, because you want to allow price to come up here without getting stopped out, essentially, maybe even the top of this candle, you can, your hard stop loss might be the very top of the body of this candle here. So you just got to half size. So if you're typically going in with 5 micros, maybe you go in with 2 micros, right? You're limiting your risk.
Yeah. Okay.
Right? Because if you're with a brand new account, you're not going to want to lose more than like $500 a day, because you want to be able to allow yourself to at least 3 losing days in a row. It's like, for me to have more than that it's very unlikely, right? So I allow myself 2 losing days in a row worth of like at least buffer, and then I can usually dig myself out of that if required. But okay. And then so going back to the support and resistance, because this is kind of like, so yeah, you can just play the touch, and like all of the data is tracked on just the touch and nothing else. Like, no, if there's a savvy level, I know you don't know what that is. I'll explain that in a minute. But it doesn't, like, it's just based on coming back to the gap and touching it and then entering with nothing else. All right. But if you happen to have support or resistance inside the gap, so we have this massive gap here, and what do we have right here? This is old support. So we'll throw a line right here. So this is kind of like a safety net. So when we're entering the trade, maybe we enter half position here with anticipating we're going to come up to this old support. So we come down, right? Double touch, and then it gets bought up. Like, see this bottom shadow? Mm-hmm. That's showing us that we came down and we just came right back up. So this is obvious support. Once we break it, it's going to hold up as resistance. Does that make sense?
A little bit, yeah.
Yeah, so we're just finding like touch points, right? If we're going down, is there a touch point to the left that we could come up to, right? Okay. Does that make sense?
Yeah.
So that will raise, it will raise the win rate, but more so it's if we happen to like come above it, and we're holding above it, then we could just maybe get out of the trade because we're breaking back above this. We know it was support back here, so it should hold up as pretty good resistance over here the first time.
Okay.
The first time we come back to it, it's always the strongest. And look at like we did right here. Look right there. Look at what happened. Old support, new resistance. Look at what happened. We just came up. This was after hours, but then we dumped. You see how that works? It's pretty crazy, eh?
Yeah, that's crazy.
Yeah. So so the strategy is like I try to like trade one candle, and I believe I did on this. I believe actually, you know what? I took this trade twice because we came down and we kept getting bought up. So I took it on this red candle. Yeah, we came up, we closed, I entered here, and I didn't really, I got stopped out at basically break even, but then I re-entered here. Once we were like pushing out of the gap, I took a nice sell right here. I didn't get a whole lot on that one, but it was a very good trade. And like I said, so if you look at and I'll put it up on the screen, but if you look at the win rate for the first candle, so I number all the candles. So the orb candles number 1, 2, 3, 4, 5, 6, 7, and so forth, right? So the first candle has so far, and this is based on 98 days worth of data.
Yep.
The first one, as of today, it has 20 wins and only 4 losses.
It's not too shabby.
Right? The overall over the almost 100 days worth of data, it's just on this, just whether you come up and you touch that first gap and then you get a reaction, right? And basically all we're doing is we want to come up into the gap and then retest the lows. Or over here, we want to come down to this gap and retest the highs. So we're only aiming to get back to here, to this area. So we're taking, in this particular trade, we're trying to capture this much. Right? Anything above and beyond is extra. Same with this one here. This is kind of like a relatively smaller trade compared to those last two, but all we're trying to get is once we touch the gap, we just want to retest the highs, which is right here, right? 25 points, 26 points. You're just trying to touch there and retest this high, because we could retest the high and fail and then drop. So we just want to get what we know we can get.
Yeah.
That's the strategy.
Mm-hmm. Okay.
And hopefully we can do that within 15 minutes. That's the ideal scenario. If we happen to just keep ripping in those 15 minutes, great. And maybe you put your stop loss to like the top of here, which is old resistance, should hold up as new support, right? Yeah. Which it kind of does. We don't get any body close. Like if you move this up here, you see how the candle closed right above it. Yeah. You see that? I was like right there. Mm-hmm. It closed above, and then I guess we did get the candle closure below it, but it still held. It's still pretty. It was kind of just an overshoot. This was a massive overshoot, but it's holding. Like it is holding, right? And then we get another gap here, and this, we are continuing. Like it's just these wicks. This is manipulation. That's all it is. It's just manipulation. But that's why the first fair value gap is king. It is the strongest one. Look at the difference between this gap. We hit the bottom of it and really no manipulation past it. But this gap, it would have probably stopped a lot of people out. And then this is the next gap. We disrespected it. There was no reaction at all. So the first fair value gap is king, and it's on and so this is where I kind of found this strategy, is because I trade the 15-minute time frame, and that I keep seeing it and keep seeing it and keep seeing it. But most people don't trade the 15-minute time frame. Most people trade the 1-minute time frame, the 2-minute time frame, and the 5-minute time frame. A lot of people don't zoom out as much as I do, so they might be missing this, right? So for anybody that is like an ICT trader, if I just tell them, hey, start looking at the first 15-minute fair value gap and trade off of that. It's got an 80, what is it? It's a 77.5% win rate. I have it over the last 98 days of trading, right? And then the orb candle is an 83.5% win rate. So that's basically it in a nutshell. In real time, as we're learning about this, basically we have no gap. There's a gap here, but it's pre-market, so that's not the strategy. The strategy is the first fair value gap in the New York session. So the New York session starts at 9:30 and closes at 4. And according to my data, the most of the trades happen in the first 5 candles, right? So, and then after that, you can see the win rate starts diminishing. So you really want to capture it, before lunchtime. So there's no trade for us right now. And realistically, this, if we were to trade off of the orb candle, this would be the earliest you could ever take a trade is at 10 o'clock. So, but as of right now, we got to wait another 10 minutes, actually another 30 minutes. We have to wait another 30 minutes for a potential gap, right? So it's just, it is a very extremely boring strategy, but the win rate is so crazy high. The patience will pay.
Yeah,
for sure.
Absolutely.
So in 7 minutes, we see the timer here. In 7 minutes, we're going to create, as long as we stay down, we're going to create this gap here, right?
Okay.
And what do we have inside the gap, which is kind of nice. We just zoom in, get this gap nice and accurate, right about there. And then what do we have inside is we have old support. Do you see how we can find the old support? How price came down, and then you see this little bottom wick here.
Yeah.
We got bought right up. So there's a reason why we stopped here. So I'm gonna just drag this line down, and this will be kind of like our gauge. Okay. If this is the gap that we take sells on, so because we're going down, we're going to be hitting the red button. That means we're selling. That means we're going to make money to the downside. So as soon as we hit the red button, we want the price to go down, and that will put us in profit.
Okay.
And vice versa. If we're going up, we hit the blue button, and hopefully things go up. But as of right now, there's no trade, absolutely no trade for at minimum 6 minutes creating this gap. But things are looking good. The reason why, like in real time, just to get a little bit more advanced, is that we had this a lot of news. This was a news candle at 8:30, and so news pushed us up. At market open, we came and retested the top of this news candle, made basically equal highs, and that we couldn't continue higher. There was no continuation higher. So it's showing us that we might need to just come down and to like rebalance basically. But as of right now, there is absolutely no trade. I did put on Savvy's levels that we're approaching right now. I'll just maybe move this one over so we can see it. So we have this level down here on ES, and then but we take the trades on NQ. The reason why we take trades on NQ is because it just you can make more money. Like for every point, like with a micro, for every dollar this moves, you make $2. And then with this side, for every dollar it moves, you make $5. But the difference is this will run like 100 points in one candle, and this will run like 10 points in one candle, right? So with the same size, you could make like $1,000 with one mini over here, and you're only making $500 over here with the same, you know what I mean, in the same amount of time. It's just this one, when this gets going, it can get going. Like you can have 50 points, and we just got the first touch over here on ES, but I don't, I do believe we're gonna get probably a nice reaction off this, but this is where timing kind of comes into play now, because we have 6 minutes left in this candle, and typically, outside of the first couple minutes and then the last couple minutes, we should be pushing in the direction that we want to push. And it's really like my strategy is just based on NQ and not so much ES. I do look at everything on ES just for basically give me some more confidence. Like if I'm in a short up here and this is staying below resistance, so this is support. We got support here, support here. We broke through it. The first time we came back to it, it's holding up as resistance now. And it's touching its first 15-minute gap, but I don't have any data on ES. Like I haven't been collecting any data on ES. My strategy is just solely focused on NQ, but it doesn't mean that I don't look at ES. I definitely keep an eye on both. Does that make sense?
Yeah. Yeah.
Like, because these assets are correlating. They kind of move the same. And when they don't move the same, there's a little bit of signs saying maybe stay away, right?
Okay.
So you want to know basically, how do I know this is support?
Yes.
So basically it's just where price turns. So when we came up, it's just where, so support and resistance, you're just looking to the left over here and looking to see where price struggled. So price came down, we couldn't continue lower, so there's support here. And then we came up, now we're just kind of making higher highs.
Yeah.
We're coming up. So, and then we stopped. The price struggled to go any higher. So that is resistance. We came down, we came up to the same spot, almost to the point, and then dropped pretty aggressively. So this is where price could not continue higher. So that is resistance.
Okay.
Right? Once we do continue higher and we come back to that area, now it's support.
Okay.
Is that a little more clear?
Yeah.
So now that we are going down, we did get a reaction right here. Like we went up, right? So we did get and it's always, whenever we play this support and resistance, it's always, if you ever do, play the break and then the retest, that's what it's called. You're breaking the resistance and then you're retesting it, and then you can take a buy off of it. The highest win rate is the first time. After the first time, then it's, then we got the break, right? So when we came back the second time, we broke it. So now it'll hold back up. The more times you use it, the less probable it'll be. So the fact that we came down, we bounced, and then we kind of chopped up, and then we came down and we bounced, and we always want to use the closest one. So yeah, there is support here, because we didn't continue lower, right? We came down, we got bought up. We came down, got bought up. We could not continue lower, and then we came up, and then we made another low here.
Yeah.
Just made a higher high, and this is the closest swing low to our price, to where we're trading.
Okay.
So we want to mark out the closest old support. So we're going to move this down. Not that this goes away, but this is just more, this is what we're focused on right now in this time.
Yeah.
So because this old support is the closest to our gap, that's what we want to be focused on. So this old support, the first time we come back to it, is going to be the highest probable time that
So it's got a huge wick on it.
Yep.
And what does that mean?
It just means that we're kind of consolidating. Like,
Okay.
I'll show you on the smaller time frame what we're doing. So let's just go to the 2 minute. Look at what we're doing. It's just chop,
Okay.
right? We're just chopping. So if we go back to the 15 minute, which is right there, let's draw out this gap so we can see it on the smaller time frame. I'll put this right here. So when we go down to the smaller time frame, we can see what made the gap, right? This was when we opened, this candle opened right here because it's 10:30, right?
Yeah.
And so it came up. That was the top. That was the upper wick.
Yep.
And then we dropped, right?
Yeah.
I think this is going to be the gap we're going to be trading. I think this is going to be the gap we're going to be trading because I can't see what time is it? Yeah, but we just closed actually, so we have a new gap. So this is let's go back to the 15-minute time frame, and then we can see the new candle just opened. See that?
Yep. Oh my gosh.
So we're 1 minute into the new gap because we're past 10:45. So every 15 minutes, a new candle starts. So now all we want is the price to come up to this area, and we're going to take a sell.
The whole candle, or just even the wick?
We just want the price to get to this is our sell area.
Okay.
This is our sell area.
Got it.
I'm probably just going to go in with 2 micros, and then if we come up here, I'll add another 2 micros. This will be the hard, like if we get above this yellow line, that'll be the hard stop. Be about a $400 loss.
So you don't want to get above.
I don't want to come all the way and like retest the high of day, that's
No.
for sure. Did technically get the touch there. I'm just going to be patient. Let's see. Okay, we got the touch. Let's see if we hold below that line. It's just the timing is a little off.
We're still 5 minutes.
Obviously, if we can avoid a loss, we're going to try to do that. Although we are kind of holding it. Yeah, I'm going to go. So I'm in. I'm in with 2. Not the worst fill. If we continue higher, so this blue line is 50 points. Right? It goes on automatically. I do think that we're going to keep pushing during this candle though, which is I think so too, which is unfortunate. But I mean, the thing is now we got to as traders, we have to eliminate our emotions. What candle are we on? We are on candle 1, 2, 3, 4. So candle number 4 has 9 wins and only 1 loss. So, I mean, it kind of is what it is, right?
Mm-hmm.
I probably will, because I do like this area up here, I'm probably just going to move my stop to above here. Just because I'm planning to average in, even though that we're getting kind of disrespected here, but I don't want it. It happens a lot whenever we have stacked gaps. It likes, if the first one gets violated, it's probably gonna go to the second one. So I just don't. I'm gonna allow that to happen. Is basically my plan. I know that basically the trade is based off of this gap, but you know, it is a pretty tight, like this is a pretty small gap, and the next gap is not too far away.
Yeah.
I might as well see if I can't play both of them. You know, if this is a losing trade, it's just I mark another point on the losing side, and the stats. It's not a 100% win rate. It's we're playing. We're just trying to put the odds in our favor. Is all we're doing.
Yeah. Got it.
But as of right now, I'm pretty good. I'm actually probably going to add on this just because we are going to close underneath. Yep, I'm going to add. Let's see, hang on here. See where this candle closes. I want to get a reaction down to, like, hopefully we retest the lows, right?
Mm-hmm.
Just see what this candle does. See where we close on this candle. I do want a bigger position, like 2 micros is fairly small position size, right? I would like to have at least 4 on. So this is my P&L, my open P&L right now. This number here is how much I'm down right now.
Okay.
Let's see if we can push up and get a better fill up here with a bigger size. I know it's kind of like weird, right? Like you don't want it. You won't kind of just want it to drop now, but because I'm in with such small size, it would be nice if I could, because my stop's not going to move any.
Yeah.
My stop is going to be basically, well, I'm going to move it just above the body of this candle. And so I'm allowing myself to take about a $400 loss. I want it to come down and at least close this gap, right? Because we don't want us to come up and then hang around and with a gap below us now, right?
Yeah.
We don't want that. But what do we have here? We are at so it's pretty far. 50 points is $200. So 60 points would be $240. Which is a massive stop, by the way. It's a lot bigger than I want, but she is what she is.
Yep.
It's kind of like we're not really scalping. We're kind of like intraday swing traders is the way I like to look at it. So I'm like averaging into the position, holding trades for maybe like 15 to like maybe 30 minutes might be the average length of a trade.
Okay.
It did close that gap though, so we don't have any gap below us. That's a nice thing, right? This one came down and touched this area here. So that's a good sign for us to go back down. I will say the market, whatever you think it's going to do, it's probably going to do the opposite.
Yeah.
Because the market has this funny way of making you think something and then it's going to do the opposite. So that's why it's super important to have a plan like this, have an entry model like this, and you just stick to it, right? And you just trade the same thing every day and you document everything. Like I have here, like it's not a lot of document. I do have a calendar where I write little wee notes, whether or not I stuck to my system or, I was feeling like I was going on till or, just little like feeling like what I was feeling during the trade.
Yeah.
Just small things, right? I keep track of. We are struggling to go higher. We get these little manipulation pops, like you see, like these little surges of like buying pressure, but it doesn't hold. Like it pops and then drops and pops, then drops. So that's kind of a showing, like price action is showing me that we're struggling to go higher. So I'm hoping once we get enough gas up here, like this is kind of like going to be our last gas station.
Yep.
And then we're going to, flood to the downside is the plan. Right? And I'm not going to move this stop. This will be our final stop out, which is the top of this candle. But I don't see us going past this yellow line. because this is the bottom of the orb candle. So this is kind of nice. We have 1, 2, 3, 4 candles down, 2 candles up. I'm expecting for this to be a like a nice red candle. This one, next one. Let's just see where it is again with our fib. Trade into that golden pocket, which is right here, 50%, and the orb and resistance.
Yep.
Right? Everything's kind of aligning right there. It's kind of nice. Might actually put some more. So put maybe 4 more on up there. Let's see where the fib is on this side. Sometimes you'd hit it right to the point too. It's crazy. Like the 50%. Yeah, we're hitting it right now actually on ES. Yeah, I'm gonna add 2 right there. If we come up around the top, I'll add another 2. Because we are in this first gap now.
Mm-hmm.
We have resistance here. We have the golden pocket, 50% of the range right here. So this is considered discount, right, of our move down. So, and we're hitting it on ES. So I'm hoping that this is the rebalance. And then we continue lower.
Interesting.
Well, I gotta move this stop down. This stop is right there. Once this candle flips red, I feel like a lot of selling pressure should kick in. Should.
Yeah.
If it does. Or it just runs up and stops. So like the Fibonacci is a little bit more advanced, right? But it's a simple tool. Once you have the settings set, all we have, if we go to the Fibonacci and we have the 50% and 61.8% on the settings punched in, and then we just draw from the very top to the very bottom, and then it gives us the discount range. This is the OTE, which is optimal trade entry is what it stands for. So this is our optimal trade entry, which aligns with the gap, resistance, everything's looks beautiful off of this entry. So we'll see if that's the final gas station to push us down further. We're starting to see the reaction over here on this side. Yeah. Came up and hit that 50% and dropped. Let's just see if we can actually drop or if we're strong. Markets are strong. It's hard playing downside in a market like this because the overall markets are so strong. So did you see when I added, you see how our average fill is up higher now?
Yeah.
This one's about to turn red. Get the green to red. Hopefully all the selling pressure kicks in. Just the price action is just terrible. So we entered here on this candle. So we've already been in it for a full 15 minutes. Once this candle closes, that'll be 30 minutes. I really don't want to hold it more than 30 minutes because it's just, if it doesn't do what you like, it should do what you want it to do within that time frame. Right? The only reason why you should be holding is if it's going in your favor. If it's going against your favor, if it's going against you and you're just holding for 30, 45 minutes, then ES finally turned red for the first time. That's some good signs. NQ just needs to let go a little bit. Yeah, there's definitely, I love like the social media, they make this stuff look so exciting, and it's like riding a roller coaster, but the reality of it is you're just sitting here looking at a computer screen. You have as long as you have a game plan drawn out, like it's super boring. And honestly, that's when you do find the place in your trading where it is super boring. That's when you're going to be successful, right?
Yeah, exactly.
Oh, there's some selling pressure. the last 5 minutes of this candle, maybe we just flush. One nice big flush. And maybe we just take some quick profit and be smart on the day. What do you think? That's what the market does, though. It plays with you. It loves to play with you. That's why it's just trade the system. No emotions. This is looking really good, actually. I almost want to add, but I'm going to be smart and not add. I think I have enough size on to be super content with the day. Either way, whether it's a loss or a win.
Yeah.
Wow, look at ES drop. Damn, bro. So if ES tests the bottom here, this is where we get into why I look at both sides. Because if we test the bottoms here, then and this is kind of like hanging out, I'll probably just get out of the trade. Because I don't want this to come down, make a double bottom, like find that support area again, and then hold support, right?
Okay.
You know what I mean?
Yeah.
So if this is coming down, like I'll see what we do down here. If we just push right through it, cool. If not, oh my god, bro. Oh my god, bro. First order just got hit. Okay, I'm out. Something just happened. I don't know what that was, but I don't know what that was. Just pressure building up.
I think so too.
And I'm not. See what happens?
Yeah.
Bought right up. See what I mean?
Mm-hmm.
We came down and tested the low, and we were holding support. $242. That's not bad. That's not bad at all.
How did you get out of it? I didn't see that.
So when you're in it, there's the first stop order. Because you remember seeing that order. As soon as it touches that, it executes the order. Just because remember, there was 2 orders sitting up here, my stop loss.
Yeah.
And then I had 2 orders down here. Yeah. Those are my take profit orders. So it came and hit the one take profit, and then once I seen it holding, and I didn't want. There's an X right where you see the P&L. Okay. There's an X beside it. So as soon as you click that X, you're full out. So not bad.
No, that's not bad at all.
That is a successful day. That is successful. It kind of sucks that our king gap didn't really hold, but I've seen this. I actually got stopped out of it, this exact trade, last Tuesday, so almost a week ago, and it would have worked out if I had have waited for the second gap. So it just when I see gaps stacked like this, then when I say stacked like this, like it's literally one gap to the next, like literally 3 candle formation, and then this is a 3, so the gap is the next 3 candle formation. When you see them stacked like this, most of the time it likes to go to the top gap. So it's not that the system didn't work. It's just now that I have seen that a few times, getting better at averaging in.
Yeah.
And I think that was like, when we started to get that massive push down, obviously I left some on the table, but I think we're still going to get it. Yeah, to be honest, so. Yeah. I think we're going to come up, maybe touch it one more time, and then just drop and really come down to these lows. But you know what? Today is a win. The best case scenario is this savvy level is right here. That would be our best case scenario, right? Yeah. Because then we're playing a break and retest with the gap, right? You're adding things to it. Okay. So yeah, it can get to be more rocket science as you add layers, but the layers isn't really part of the entry model. The entry model is to play off of the first gap, and literally I have the stats right here that 78% of the time, that first gap, you get at least a reaction back to where you came from.
Okay.
Right? That is the entry model. That is the game plan. That is the model wrapped up in a box with a pretty bow on it. Actually, all you need is those 2 boxes. Mm-hmm. Right? Everything else that I've put on is just added layers. but the model behind this data
Yeah.
are just those two boxes. That's it.
Yeah.
It's actually off of the first box, but in this case, we got it off the second box. And look it, I was right. You know, once we hit 50% over on this side and we dropped, like these are added layers, right, to the strategy. It's all context is how we explain it. It's context to the trade. So, you know, hitting 50%, it adds a little bit more context. Coming up to the bottom of the orb candle, a little bit more context, right?
Yeah.
But you don't really even need that context. You can just put this fair value gap, this one right here that was created on the way down, and this fair value gap that was created on the way down. If they're stacked like this, you average in slower, anticipating to come up to this one. Once we did come up to, and look at, we hit the middle of the gap perfectly and then dropped. So it was, you know, it's I know to me it seems simple, but it's because I'm so used to it.
Yeah.
So I'm trying to make it as simple for exactly, right? So when I post something and I say, so on today's video, I'm going to say sell here, right?
Yeah.
We sold here. We got the move down, right?
Yeah.
This one, we retested the lows. As soon as I seen that, we literally, look at this candle. We went and this is the low right here. I know this is the low, but this is just a wick. We don't we try not to pay attention. We want to see, like, we came down, we came down, and we came down. So this is the low right here.
Yeah.
Even the body low is probably the safest area if you want to be like, Trevor, where is the low? Let's just say the body of this candle is the low. We came down, we tested that low, and then we got bought right up. And we didn't quite, which is unfortunate, because it would have been nice if we tested the low on this side and not on this side, because we would have banked. But that's basically the strategy, is we want to come down and test the lows, right?
Okay. Makes sense.
That's it. Thanks for tuning in, guys. And of course, feel free to reach out for any more questions, and we'll catch you on the next one. Peace.